Hello, everyone. Today with us, we have Sam Eddy. He's practicing CPA in the state of Florida, as well as chartered accountant in Australia. He gained his experience working in public accounting for 7 years before transitioning to the private sector in 2015. He spends a great deal of his time working on budgets, forecasts, and data analytics to support the success of companies in the medical and mental health fields. He has also extensive experience in drafting key performance indicator dashboards for ABA providers. His international and U.S. accounting experience has allowed him to hone his accounting skills in fields such as manufacturing and healthcare. He received his bachelor's degree in commerce from Monash University in Melbourne, Australia. Welcome to our podcast, Sam.
Thank you for having me. It's great to be here.
Great. It's so exciting. Australia. It's definitely on my list of places I want to go.
Yeah, it's very far away. It's definitely a long flight to get there.
It is. How long have you been in the States?
For just over 10 years now.
Okay, so
I'll just start off saying MarginKeepers came to us highly recommended.
Yes.
Multiple ABA providers recommended you all. So I'm really glad that we can partner and kind of join forces because, ABA practices really need help on the business side. And so I'm glad that we can do this and just kind of share some knowledge and kind of move forward. And help these well-meaning, BCBAs. Yeah.
That's really our focus area. We really specialize in this industry because, as you say, a lot of these companies are BCBAs starting out who don't have that financial knowledge or background to kind of run the business from that side. So it's, we come on board to provide that expertise and help them from that side so they can focus more on the business and providing services.
And I'm just curious, how did you get into this, right? Like everybody seems to have a little unique story as how they started getting into this industry. So I'm curious if you have a cool origin story.
Yeah, so originally my wife, Joanna, she's a CPA as well. She was working in public accounting and her sister was actually starting up an ABA practice. And Joanna had experience in the medical field prior to working in public accounting. So she had knowledge of how things work, the ins and outs of billing and, the intricacies to do with that kind of field. So she decided to help out and really it's just grown from there. Really, okay, we've just picked up, other BCBAs starting out companies or existing companies looking for help and grown from that.
All right. So I guess today our focus is gonna kind of be on bookkeeping. And we do have some questions as we go through. We'll kind of bring them in as they kind of fit, but we'll kind of let you take it and we'll go from there.
Yeah, so I guess I wanted to give a brief overview of what is bookkeeping, what is accounting, right? Bookkeeping is kind of the fundamental step to record all the financial data, right, that you have. So from your business bank account, your credit cards, that all needs to be recorded and categorized. So that's where bookkeeping comes in. Accounting really is looking at taking that financial data, interpreting it, and preparing it in a manner to present financial statements. So things like a balance sheet and a profit and loss, which are really fundamental for business owners in analyzing the business, but also being compliant, right? So you need a balance sheet and a profit and loss for tax returns. Maybe your bank needs it, or you have audits for certain payers and you need to provide that information. So it's kind of bookkeeping is the fundamental first step to get everything in, and then accounting is really interpreting that financial data.
When an ABA practice comes to you, right, like where is your main focus? Like, are you helping them come up with a budget? Are you like where do you find yourself fitting into that when they first reach out?
It really depends on where the business is at. If they're starting out, it's kind of saying, okay, well, where are you at? Are you already billing clients? Do we need to set up your accounting software? Maybe they've already started doing it themselves. So coming on board to try and help them take over that role. Or maybe they're an established ABA company. So it's, kind of maybe looking to change accountants. Maybe they're having issues with the current accountant not having specialization in the industry. Maybe they have questions that they're just not able to help with. So looking for someone more specialized who can assist them and guide them in adjusting the financial reports to better assist them in making decisions. So it really depends on the client-by-client basis. But our goal is really to adjust the financials and make sure they're reliable and accurate, and in a manner that can help them identify potential problems in business or growth areas. On top of that, we do budgets and forecasts and assist with that. But really, the fundamental is having financial reports that are reliable.
Yeah, I know when we, I know when we started. That wasn't that was not us. Accurate bookkeeping. We struggled with that for many years. And do you all do payroll as well?
We don't do payroll. We see that as something that there's a lot of payroll providers out there that do it well. They do all the compliance, and they're fairly affordable, right? Most of the options, and it's best to leave that specialty to them. We really focus on receiving that information and making sure it's presented in a manner that it is able to be interpreted by the owners.
Gotcha.
Right. Well, what would you recommend when someone's starting an ABA company? What should your first step be when you're to start your bookkeeping and your accounting, to get your records started? What would be your recommendation?
So, the first step, sometimes there's a delay and say you maybe haven't set up a business bank account, you're spending money personally. It's important to track that. Now, you may not have an accounting software. Excel's good. Just track those expenditures because they should all be captured more for tax purposes, right? To ensure that they're expensed, right? You're claiming deduction for them. But it's important to capture everything related to the business. Once you open a business bank account or credit card, we recommend going into an accounting software such as QuickBooks or Xero, the more affordable options, to start tracking it properly in a true accounting software outside of Excel. Excel is not an accounting software. It's great in the beginning for tracking stuff, when you don't have a bank account. But in the end, you really want to switch to an accounting software that's properly going to generate those true financial reports.
Why is it better to use software versus just sticking with Excel?
A lot of it's to do with the controls, right? So things like, and I'll touch on this too, is account reconciliation. So making sure that all the information is in there. Excel doesn't do that. You could have a super fancy Excel spreadsheet, but it doesn't really have the true controls that an accounting software has in place to ensure that everything balances out and everything's included, right? Because if you're not if you have information in Excel that's not reliable and you're making decisions on that, you could be making very poor decisions.
Yeah, that's a good point.
And so one of the questions that we have is, what are the most common bookkeeping challenges faced by ABA practices?
I guess the one thing I wanted to touch on too is the basis of accounting, right? That comes up, and when I have calls with owners, sometimes they're not aware of the differences, and there is even a difference in basis of accounting. So there's cash basis and accrual basis, and they're very different, especially with this industry and how the information is presented. Under cash basis, transactions are recorded as they happen, right? So as money is received, as money is paid out. Very similar to your bank account, right? Ins and outs, that's when everything gets recorded. On accrual basis, it looks more at when the activity takes place that causes a financial result. So being that when income is earned or expenses are incurred. Now, the primary difference that shows in the profit and loss for ABA companies is really the matching of income and expenses, right? In this industry, it's common to see a delay in payment, right? From when the date of the service being performed to when you receive the payment. You may perform the service on a Wednesday. It may not be billed out until later in the week or the next week. So you've already got that delay. And then there's delay between billing and when you receive it. So there could be this 30 to 60 day delay between when you perform it and when you receive the money. Now, you're still paying someone to perform the service. You're paying an RBT, you're paying a BCBA. That cost is being paid at a particular time. So, for example, if you received a deposit from Aetna today for 4 hours of 97153, that was provided in January, on a cash basis, you would record that as income in February, the day it's received. But the payroll cost to be paid to perform those services would have been recorded in January. So there's a mismatch. There's no true matching of expenses against income. Now, on an accrual basis, it's a little different where those services would have been recorded as income in January, which would then align with that payroll cost in January. And the key difference here is that there's a potentially misleading representation of the business, right? Dependent on your collections and also your pay cycle. So if on a cash basis, you may have one month with great collections and your profit and loss look great. You have a huge profit. The next month, your collections are down. Maybe you had 3 pay runs that were paid in that month and you have a huge loss. How you can appropriately, monitor and assess, okay, how well is the business performing on that basis is very difficult because there's so many external factors that are impacting and you can't really truly see how profitable the business is.
And this is what makes you guys so amazing, and I'm so excited that you're here because, and I wish that you were around 12 years ago that I knew about you guys. If you were, I wish we would have known about you then, because that's the biggest piece that a lot of professionals don't understand. When you go to an accountant or financial advisement of any sort, right? They don't get that piece,
right.
And so. We used to call it insurance land, like what money is out there in insurance land. And it took us years to get a handle on how to even plan for, like how to budget and how to plan for that. And there was all that constant insecurity of how are we going to pay our staff and make sure we have enough money for those months that, it takes a little longer to get your payments from insurance. So that I'm just really grateful that you guys are doing what you are doing because we need this for sure.
Yeah. And then you speak our language, right?
You do.
Yeah. We're well aware of all the codes and the intricacies of the billing side and how that flows through, as you say, dealing with delays in payment in the beginning of the year where you have more patient responsibility, you have deductibles, co-pays, co-insurance that you're having to deal with and resetting insurances. So having, as you say, cash flow is kind of a concern at that time. So having sufficient balances at the end of the year to cover that shortage potentially of cash flow in the beginning of the year to ensure that you're covering payroll and until you're collecting that money.
Something we are always saying is you need to get an accountant right away when you start your practice. You focus on the science, they focus on the numbers. You definitely want to reach out to MarginKeepers. They are trusted experts in ABA accounting, business consulting, and tax services.
With in-depth knowledge of the applied behavioral analysis field, they tailor financial statements to highlight what's vital for ABA companies to analyze, saving you time and effort.
Running an ABA practice comes with its own unique challenges. That's where they step in, helping you identify cost-saving strategies and ensuring compliance.
And when tax season rolls around, count on MarginKeepers to make sure all your tax-related boxes are checked. Compliance is key.
Concentrate on the science, leave the accounting to MarginKeepers. Reach out today at 954-395-8107 or visit www.marginkeepers.com.
Right.
So a big question we get often, right, is we should apply standard rates regardless of who we're submitting our payments to, whether it's Aetna and they. Like I'm just giving random numbers out here. They don't mean anything, but let's say 97153 with Aetna, we're getting $55 an hour. With Optum, maybe we're getting $63 an hour. But we should submit our standard rate no matter who and no matter what our contracted rate is. How do you handle that? Like, okay, I'm submitting 75, but I know I'm only going to get 55. Do I write that off? Does that count as anything? How do I handle that?
So from an accounting perspective, we always generally record revenue on contractual because ultimately, you may bill it at a high standard rate and that's fine. But what you're ultimately expecting to collect is a contractual amount. So when we look at revenue and accounts receivable from an accounting perspective, we look at it on a contractual basis. Now there may be adjustments to those numbers, right? So maybe there's denials and things like that. Those would be considered write-offs. So or there's underpayment, things that can be adjusted to contractuals, but we generally record it on contractual because you want to have a true picture of what you're potentially going to bring in, right? Not necessarily what your standard rates are.
Okay. So then we potentially if someone has a $5,000 deductible and they don't pay it, that would be like a loss. We would write that off. Is that right?
Correct. Yeah. So on an accrual basis, you would record that as a write-off. Now, obviously, on a cash basis, it's different. There is no accounts receivable, so there's no real write-offs. But from an accrual perspective, in order for your accounts receivable to be accurate, you would have to write off that balance.
Okay. And so I'm assuming that you think that accrual would be a benefit to an ABA provider. Is that?
Definitely, it's the best basis overall because of that delay in payment, and it allows you to see a true profitability of the business. The main drawback is it is more expensive generally to do, right, and more time intensive because you're having to do more calculations in determining the accrual revenue, which the ease depends on, okay, which practice management system you're using. Are the contractual rates in there? Is it easily accessible? Or is it something that has to be manually calculated? Also adjustments to your expenses for accrual basis, right? So payroll, for example, if you're on a bi-weekly cycle, there's generally a pay run that covers 2 months, right? So there's an adjustment that would need to be done there to account for that, to estimate what the payroll was for each month.
Gotcha.
Okay, so I just want to make sure I'm like tracking here, because this is the area that I was more clinical based, right? And so I know there's a lot of BCBAs out there who are more focused on clinical based, and a lot of this is brand new. So you're saying that accrual helps you to see your true profitability, and that even though it may be a little more expensive and take a little bit more work, it's going to help you have a better picture of what you're dealing with.
Correct. Because if I always say clients that if you're on an accrual basis and you're in a loss position, there's obviously a fundamental problem with the business that needs to be resolved, because that indicates that even if you collect all your billings at your contractual rate, it is not sufficient to cover the expenses you incurred. So you will continue to lose money month on month until you see an accrual profit. And that's very hard to assess on a cash basis. If you see those ups and downs with collections, you may not know that you're actually in an accrual loss position. You may see it in the cash balance, that your cash balance is gradually dwindling month on month. You're having cash flow problems. That's generally an indicator that there is an accrual loss problem. So being on accrual allows you to at least identify, hopefully, what's the cause of that. Is it a gross margin problem, looking at your direct labor, so your RBTs, your BCBAs, compared to your contractual rates, or is it an overhead problem? Do you have too much in overhead expenses? So your admin payroll, your rent, your utilities, your office expenses, are they too much for what you're generating in revenue?
My next question is, because I'm going to say, like, maybe I'm incorrect on this, but I'm going to say the vast majority of ABA providers are probably on a cash basis, I would assume. And so if they come to you and you're like, yeah, we should probably switch this over, is that a huge deal? Do you have to change something as far as like to the government? Like, do they have to know how you're doing this, or is that a big deal?
In most cases, no. So it's common. A common question is, okay, I report on a cash basis to the IRS. Does it impact if I change to accrual for financial reporting? And it doesn't. You can be on accrual financial reporting and still report cash to the IRS, right, for your tax return. The only important thing is that you're telling your tax accountant that your numbers are on accrual, and they're doing appropriate conversions to cash, because there may be differences, right? Obviously, your cash collections may be different from what your accrual numbers are. So it's important that they are doing that conversion to ensure that the numbers they're reporting to the IRS are truly cash basis.
Okay. Yeah, because I could imagine, like, we do a lot of work in December and we don't get that till February, or, mid-November, there's delays and we don't see that until January or something like that. So
how, like, as far as taxes are concerned, so it goes in the year that you receive it, right? The money, like,
correct. If you're a cash basis preparer, you would record it based on your collections. So income would be on a cash basis. So whatever money came in from the insurance companies, your clients, that would be reported in that year.
But if you were doing this, and maybe this is a dumb question, but I'm going to ask it. So if you're accrual, and so I'm not even saying that right, but
tough word.
Yeah, it is. It's a tough word for me. But let's say you do, you submit you submit your claims in November, but you don't see them that year. Would that get counted on taxes for that year? Does that make sense? Does that make sense?
So if you've billed out, so on a cash basis, you've done billings in November, but you haven't received them at the end of December, that wouldn't be counted as income on cash, right? Because that's still effectively an accounts receivable, which doesn't exist for the purposes of a cash basis report. If you were reporting on accrual, which most ABA companies are not, but if you were reporting accrual for tax purposes, it would be included.
Okay. So you would advise them to like look at their books on an accrual basis, but not really do their taxes. Is that correct? On a accrual basis, is that
correct? Generally, that's easier. As if for the very large ABA companies, they may be doing it. There are obviously thresholds that require you to report on accrual to IRS, but most ABA companies are less than that. So it's easier just to do cash reporting for tax.
All right, and then I guess the question was, and we've already answered.
Yeah,
this one.
I think we can skip over.
Yeah, we'll skip over that one. Okay. And so I guess the next piece, unless we miss something on accrual versus cash basis that that you would like to mention.
No, I think we kind of covered it. A lot of it feeds into the other areas I wanted to look at. So the next step, I guess, is when you're doing a setup for your accounting software is looking at chart of accounts, right? So the chart of accounts is what accounts you're going to code those transactions as part of the bookkeeping into the accounting system. So your income and your expense accounts. What you want to do is ensure that you set up the accounts to be appropriate for the industry, right? Accounting softwares like QuickBooks will give recommendations for similar industries, but not exactly, right? So there's differences obviously with the AB industry, and you want to kind of tailor it to the industry and your company, right? Maybe you have specific, things you want to track, but you want to highlight significant expenses so you can identify potential issues. And that's where looking at splitting direct labor and admin labor comes in. So we generally say direct labor is, your RBTs and your BCBAs performing billable services primarily. You want to code to a cost of goods sold, right? So you can track the gross margin of the business, because that is a separate potential problem from your overhead. So and then your admin employees, so your office manager, your receptionist, your scheduler, your biller, if you have a clinical director who's primarily, not billable time, they would all be admin staff. You would code to overhead expenses along with your rent and your office expenses, continuing education, things like that.
Yeah, that does make sense.
Yeah. The question I get, and this is really not along the same lines, but a lot of people starting out, they'll ask me, okay, I haven't really started my business yet, but I'm going to buy this membership or I'm going to buy this training on how to start my business. Can I expense those off after, or do I have to have my LLC started or my PLLC before I can start expensing business expenses?
I mean, it's generally advisable to create the company first, but you can expense them as part of the business and say it's a startup expense. But generally, you want to sort of create your company and then start doing those expenses. As I said earlier, ideally you want to limit the stuff you're paying personally. It's best to have sort of business accounts set up and be really, really running everything through that, which, the first step is to set up the entity, get your EIN, then open the business bank account. Leading on from the chart of accounts and where I was talking about direct labor and admin is really the payroll accounting side, right? Now, most companies have a payroll provider, maybe QuickBooks, there's Gusto, ADP, Paychex. There's a lot of companies out there. One thing you want to do is try and discuss integrations with your accounting software, because payroll accounting is difficult. It's not as straightforward as just saying, okay, here's my payment to Gusto. That's going to go as an expense. There's different components. There's your gross pay, your taxes, benefit costs. Do you have health insurance, a 401k? You want to ensure that those are appropriately tracked so you ensure you're paying your payroll liabilities. You don't want to get into the situation that you're not paying the IRS or you're not paying the 401k and you open yourself up to liability down the line. So it's very important that you discuss integrations, because that streamlines that process, right? Ensuring that everything is brought across to the accounting appropriately and is being tracked.
So I have a question that one of our members posted on Facebook, and I feel like it might fall into this category. If it doesn't, you can let me know and we can answer it at another time. But how does paying yourself work when you are a partnership LLC and cannot put yourself on payroll?
Okay, so as a partnership, you can't be treated. You're not treated as an employee, right? So the only way to pay yourself is through draws, right? So that hits in the balance sheet under equity. Now you can pay yourself a regular draw, effectively like you're paying yourself, and that's kind of recommended because then you're kind of consistently taking effectively like a paycheck. But that's the way it would have to be treated. It can't be treated as an expense because you're not treated as an employee. Whereas it's a little different if, say, you're an LLC and your tax is an S corp. As an S corp owner, you can be treated as an employee and you can draw a salary. So that is a little different. Now you can still take distributions as an S corp owner, but they have to be in an appropriate proportion. So you have to take a reasonable salary before you can take your draws.
Do you recommend one over the other?
It really depends on a case by case. In the beginning, I think an LLC or a partnership is recommended because your cash flow is not as certain, right? You're doing initially, you got a lot of outflow rather than inflow. So it's hard to say, I'm going to set this salary, I'm going to have this set salary each pay run, because you don't have that consistent cash flow. As you grow, there's potential tax benefits to being to an S corp and drawing that salary, but it's really a case by case basis.
And you can change that at any time?
Yeah, so generally it's pretty easy to switch from like an LLC to an S corp. You just have to make your election before the filing deadline at the beginning of the year.
Good to know, because then a lot of people start out as like a sole BCBA provider, and whether they plan on growing or not, some people don't plan on growing and they end up hiring staff and growing. So I was curious because if you needed to look ahead or if you were able to change it. So that's good information to know.
So I actually have a question on the partnership, and I don't know the answer to this. So let's say you start a partnership, like an actual partnership, and the partner says, "See you later." What do you do in that situation? Do you have to dissolve the partnership and then start your own thing, or can you have a partnership without a partner?
There's a lot of intricacies there. It would be specific to the case. Whether there would be, generally there's a buyout, right, for that partner, and that would have to be flow through return and the accounting. You don't generally have to dissolve it, but it's kind of, there's a process there to go through that transition of ownership.
I was just curious if it would be better if you were thinking about a partnership to start as an S corp, knowing that you could do the dividend thing between the two partners, and then if there wasn't, if that partner did leave, then they would just get, they wouldn't get their dividend. I don't know if that makes sense.
I mean, they each have, they're each complex, right? Anytime you have a change in ownership, no matter the structure, it is a complex transaction. I wouldn't recommend one over the other, right? As far as structure. Ideally, you don't want to be in that situation, right?
Ideally, you don't want to be in that situation.
And we see that, that owners want to leave, some owners want to leave, and at least it's hopefully on good terms. And there's some procedure where there's a buyout. But ideally, you don't want that to happen down the line.
Yeah, one of the things, as we're helping people start up, one of the things we recommend is like having an operations agreement and a contract between the two of them, just to make sure, like, you start off as friends and hopefully you remain friends, but sometimes you don't, right? And even between husband and wives, something we didn't do. Thank goodness we're still together. But, we've seen that through divorce, right? That can be very challenging, and who owns the business, really, right? And so, that can be very difficult. So it's good to have those things up front when we're still talking to each other, communicating, and then, that does make dissolving or buying someone out a little bit easier if it comes to that. Okay.
I was just checking to see if we had any more questions that came through that kind of pertain to this, but no, I think we're good. Okay. What else? Is there anything else that you wanted to touch on with chart of accounts and that type of thing that we haven't discussed yet?
I guess the other thing, that's kind of related is account reconciliations. So, account reconciliations in your accounting involves looking at your account balances and comparing them against third-party sources. So this mainly relates to things like bank accounts, credit cards, any loan balances, any debts, and ensuring that they're accurate, right? If you're doing the accounting yourself, it's important this step being done. If you're doing it yourself, or you have someone coming in, reviewing it and doing it, because it ensures the completeness and accuracy of those accounts. It's the number of times I've seen that reconciliations are not being done, and there's myriad of mistakes, right? And the only way it really gets identified is through that procedure. And this goes back to using an accounting software over, say, Excel, is this step, right? Of reconciling and ensuring that you're not duplicating revenue, or you're missing expenditures, and underreporting expenditures, because ultimately this is going to go through to your tax return, right? So you want to ensure that the numbers are accurate. Maybe you're overstating your income and you're paying more tax than you actually should be, right? So this is an important step that should be done, obviously, on a monthly basis as statements are available, to ensure that it's accurate.
And then you have them. So it's not a big push at the end of the year when you're getting your taxes ready, right?
Yep, it's not okay, we need to reconcile the last year and go through, find all these differences and fix them.
As Steven's face turns like red. We've had too many years where we were, stressed out at the last minute, trying to compile all of that. And, I just hope that we were able to triple check it. Our triple check worked, and we were able to get all the pieces, back in the day. I think it's outside of I don't think they could come back for that many years back, but
we're always saying you don't be like Steven and April. Get bookkeeping under control.
Yes.
Right when you start, right? Get an accountant right when you start. The more I hear you talk, the more I regret my choices in life. And so I'm like, I wish we would have had you all take care of us, because I think the amount of stress, the undue stress for no reason whatsoever, right? Other than to maybe save $10 a month, right? It just seems pointless. And so why not do this? And
well, we talk a lot about, learn from our mistakes, but we also talk a lot about you don't know what you don't know until you don't know. Yeah. And that's the scary part, is at least for me, because I have, and I still am learning about business and finances and stuff. I'm probably learning more now that I'm part of Steven with 3 Pi Squared than when I was an ABA agency owner. I had Steven to lean on, but even still, I should have known more, right? And it was kind of scary, because what if you don't know, right? But the only way you're going to know is by getting in there and learning, right? Yeah. And no matter who you hire to do your accounting or your bookkeeping or whatever, I feel like it's one of those things that you should have a knowledge, at least a general knowledge yourself, so that you can check in and you make sure that at least you can tell if maybe there's some red flags, or what to look out for, right? So, yeah.
Oh yeah, 100%. It's very important to have an understanding of what you're looking at, right? You're receiving these reports from your accountant. What does it mean? What is an asset? What's a liability? What does my equity section mean? How does that flow through with the profit and loss? So you have an understanding of what you're looking at. And you want to be asking your accountant that, how's this working, right? So I have an understanding to kind of check that these numbers look reasonable based on what I'm experiencing as a business owner.
Yeah, absolutely.
And I think what's nice about you all is that because you work with so many ABA providers, I'm assuming, and you can correct me if I'm wrong, but I assume you can look at someone's books and say, yeah, that sounds right. Yeah, you're going to see that much, you're going to write that much off. It's normal to have 5% a loss on insurance claims or copays and deductibles, or, no, that's completely wrong. That's not what we're experienced with. Does that make sense?
Yeah, we anytime we, even if it's an existing practice and we look at their books, and we can identify the problems just from upfront looking at the numbers and saying, okay, well, your gross margin is too low, right? You have a problem of either your pay rates are too high compared to contractual, maybe a non-billable percentages are too high, and that's driving down your gross margin, right? Or it's the overhead. We can generally identify from just looking at the numbers where the problems are. hopefully when you pick an account and you do all that up front, you're not going to have to kind of find that later, right? It's kind of, preventative. We're monitoring and managing the business. So we're identifying those problems up front instead of being too late, right? The time where maybe your cash flow is really strained because you've been in accrual losses for a year and you're struggling, and you're having to take out loans or, high interest loans to cover, right? Short-term cash flow problems, which is a very bad situation to be in. And ideally you want to have, upfront identify those issues and resolve them so you're not in that straits.
Yeah, absolutely. Yeah. And just a quick question on the on reconciliation. How often, and you may have already mentioned that, but how often do you recommend doing that? Like every month? Is that something that?
Generally, I'd say every month. At least because most statements are available every month, right? Now, credit cards have weird months, but you still reconcile based on the statement date for those as well. So, there's different periods throughout the month. You may get a statement mid-month, but at least every month you're doing sort of the prior month statements.
And because a lot of ABA practices, especially when they're starting out, and you kind of mentioned it, like the first year, 6 months, there might be a lot of expenditures and not a whole lot of profit. But then there is this exponential growth period where, okay, the BCBA finally gets in network with funders. Now they're hiring RBTs, and they see their revenue go from almost nothing to a huge difference. Is there anything that they need to plan for in that period that you recommend?
Generally the only thing would be potential cash flow, right? So, obviously if you're trying to substantially grow, so you're hiring a lot of new employees. So generally there's an upfront cost to that. So, you're hiring a BCBA and potentially waiting for credentialing, or so you've got to cover that salary or that cost. You're hiring RBTs to perform more hours and you're training them. So that training time, you're not collecting any revenue. So that upfront cost and having enough cash flow in place to cover that shortage for that growth is very important. Potentially doing projections and scaling. Okay, if your current location has a capacity constraint, are you going to have to add a new location, and what's that cost going to add? Looking at that projection is part of growing the business and how that's going to be impacted.
Oh yeah, and I know you mentioned a lot of different payroll apps or services. Do you have a this one works best?
A favorite?
Yeah.
A favorite? Well, I would say Gusto is probably our favorite. It's pretty user friendly, and as far as where I mentioned the integration, it's one of the better ones and more user friendly. If you're looking at that, but it really comes down to preference too. Then it depends if you want, say, a PEO, right, which is where they're doing literally everything for the payroll, and you're kind of lumped in for benefit purposes, so you get a better package. Generally, that you have to go through, say, ADP or Paychex, one of the larger ones, or more unique payroll provider may offer the PEO package. That's different from standard, say, Gusto.
And then, just a quick one on what are the the common mistakes that, common mistakes or red flags, that you've seen?
Yeah, so running through, the things like not adding new business accounts. So say you open a new checking account, a savings account, you open a new credit card or even a sub card, right? So we see common that, you may have a credit card and you have a new sub card you assigned to an employee. Maybe that's not being brought in, right? It's very common, even in the accounting software, they're not 100%, right? A lot of them are set up to bring in transactions, but they're not always doing it accurately. And that's due to the connection with the banks and how that works. And so it's important to ensure that those are being added or at least identified through the account reconciliations, right? That discrepancy should show. Coding credit card payments as expenses rather than a repayment of the liability. Will duplicate your expenses and show a lot more expenses than what you actually have. Coding money received as revenue instead of loans or refunds, right? So things that are not actually revenue related. getting coded to revenue. Not reconciling, obviously, is a big problem. And as you say, like if you're not doing it consistently, there's no real reliability on the accuracy of your reports. Not splitting loan payments. So loan payments, usually there's an interest principal portion. So doing that split, generally your liability should be your principal portion, and your interest portion should be going to your profit and loss as an expense. So, there's a potential that you're misstating both your liability and your expense if you're not appropriately splitting that. Nowadays, there's a lot of AI rules and things are getting into even the accounting software. I always tend to say don't necessarily rely on those things. Accounting software is getting better about suggesting, say, codings or matching transactions, but don't always rely 100%, because if you do, it can create a lot of problems and it's hard to unwind those mistakes. So, at least having an in-depth knowledge of what it's trying to do so you can check and ensure that it's doing what's correct before agreeing that it's right. There's also things like rules on transactions. Be careful, right? If you have categorizing an expense, say from Amazon, maybe it should go in multiple categories. It could be an office supply. It could be, say, therapy supplies, right? So it's toys to perform services. You have different categories you generally code them to. You don't want to set up a rule that's going to be general, right? You want to ensure that they're getting coded appropriately. Or say you set up a rule for PayPal. Well, PayPal could be multiple things, right? It could be, contracted service, cleaning. It could be purchasing equipment, multiple things. So just be careful with those kinds of things and applying general rules. And then getting back to payroll, just getting an understanding of your employee benefits, right? Not duplicating that expense. If you're invoicing, how is the payroll entries getting recorded for your employee benefits? And making sure you're not duplicating expenses around that.
My silence is just, I'm just processing and taking all of this in because, it's there again, like not a lot of professionals would understand all of those pieces, because I'm thinking to myself, oh, did we do that? Did we, know, because it's true. Like you have multiple reasons, uses of Amazon and PayPal and whatnot. And then also like, are you duplicating those? And yeah, I mean, that's a lot to really think about. That kind of falls in that category of you don't know what you don't know until, you've made that mistake and you learn. But
again, just going back to the knowledge that you have, that there's just it's different. We talk about going with a general employment attorney. They're gonna know some stuff, right? Of course, but if they don't know ABA, man, that's tough, right?
They may not understand stuff like
they just don't understand. Like they don't understand home healthcare, split shift law. Yeah. Like they're just things that they just fundamentally don't know. And they can certainly write an employee handbook for an office space, but they just don't have that general knowledge. And I feel like that's very similar here with accounting, right? There's just this fundamental knowledge that could be missing that could really set you back. And so, again, the feedback we've gotten from you all is just amazing. I've not heard a single bad thing about you guys from all of the ABA practices that we work with, and many of them have you as their accountant right now. So, that's just it's wonderful that there are accountants like your team out there, and so we just really appreciate you're willing to come on this podcast and share your experience and knowledge.
Yeah, it's so exciting because the field of ABA is still so young in the scheme of things that it's very exciting when other professionals that you need to consult with to run a business start to get a better understanding of what ABA is.
Absolutely.
Is there anything that we missed that we didn't cover that you would want to make sure that we cover?
No, I think it's been great. I appreciate you having me on and discussing these important topics of ensuring that you have accurate financials, right? It's very important as business owners, and we're always here to help the industry and try and help them grow, right? There's constant challenges in this industry and external impacts that, are out of the control of the owners. So it's being able to, adapt and look at the financials and play around that, right? And ensure that you can still grow.
Yeah, I think a lot of business owners, and maybe I'm wrong on this, but I feel like this is pretty accurate. A lot of them just want to put their head in the sand, right? Like, it's like, oh, I don't know what's going on over there. Everything seems fine. I'm not going to mess with it. And so, but because it's scary, it's overwhelming. It causes a lot of anxiety. And so having that knowledge that you have, I think, can set some people and it's just a better position, right? And even, not that many people, maybe some people listening to this will be thinking about that, but even selling your practice, you're going to do it at some point. And having your books in order is like so important.
Yeah, and it comes back even, we've seen clients that look to sell, on the basis of accounting also comes into play. Potential buyers will prefer accrual because it gives them a better picture of what the business is doing performance-wise. But it's definitely important if you are looking that route, you need to have your books in order. That's the fundamental thing that they're going to look at as far as valuing the business.
Yeah. I have to imagine that that's going to make a huge difference, right? Somebody that comes with their stuff together, right? They know what they're doing. The buyer is certainly going to be more confident, right, than someone that's just like handing over Excel an Excel file there. I guess this is right. So definitely. Okay.
Well, it's exciting that you guys also have like a special treat for the audience. You want to tell us about that?
Yeah, we're looking to offering our suggested chart of accounts. So what I mentioned earlier, as far as setting up income and expense accounts specific to the industry, we wanted to give that out for free. If you just send us an email, you can email us at assistance@marginkeepers.com and just reference the podcast, and we'll send that out your way so you can kind of see what we recommend as far as setup.
That's great. Yeah. So what we'll do is we'll put that. For everyone listening, watching, we'll just put that in the notes so that you can click on that and then just mention 3 Pi Squared podcast and you'll get that free chart of accounts, which I think could be very helpful for even if you're listening to this and you're like, I got it. Just download it and see if it works, right? Like just take a look at it, right? Mm-hmm. And so I think that could be very beneficial to new companies and established companies. So, yeah.
So, Stephen, would you like to share with the audience how they can locate Margin Keepers through the affiliate program?
Yes,
Isn't there a specific way that you can kind of get to that?
So you can go onto our website. Again, I'll share this link, but there is Margin Keepers is a business affiliate of ours. Again, to become a business affiliate, we do reference tracks. We talk to you all a couple of times, right, just to make sure. And then we look for feedback from our current customers that are using that business affiliate for positive feedback. And like I've already said, but like 100%, right? Like there wasn't anything negative, nothing at all. So that again just makes us feel comfortable with doing these things. And so you can go to our website, click on podcast, click on business affiliates, and you'll see their stuff there. And you can book a time with Margin Keepers to discuss bookkeeping or any financial things. So and again, we'll put that in the notes and this will be going on YouTube too, I suppose. So it'll be in the description. That does that answer?
That's perfect. Awesome. Yeah, I just wanted to make sure that everyone knew how to get in touch with Margin Keepers.
And is there anything that we missed, Sam, that you think would be important to let ABA companies know before we end?
No, I think we've really covered everything. I think it's just make sure, look at your numbers and make sure if hopefully they're accurate, right? Or work on it. Even if you're doing it yourself, look at taking the steps to ensure that, you have reliable data to look at, just like you do for practice.
Yeah.
That's a great point. Yeah. Making sure that your numbers are accurate and that your data is reliable. That's a good one.
Yeah, for sure. Okay. All right.
Well, thank you so much, Sam. We really appreciate your time, and I really enjoyed learning more today during this podcast. So thank you so much.
No, thank you for having me on. It's been a pleasure.